Right. So in the previous video, I've already recorded the case scenario 1 to 7. Now let's proceed on, further onwards from case scenario 8. Okay. Right. So OPS Chemical, a prominent player in India's industrial landscape, has been etching its market since inception to 2008. Headquartered in the bustling city of Vadodara, Gujarat, listed on the BSE and the NSE, the company has steadily grown into a multifaceted entity catering to diverse industrial needs. OPS Chemical Limited core strength line in its robust manufacturing capability. Spread across multiple state-of-the-art facilities, the company produces a wide range of industrial chemicals, including the specialty chemicals, performance chemicals, and the basic chemicals. These products have application in various sectors, from pharmaceutical and textiles to paints and coatings, construction and agriculture. NLP and Company, a CA firm, was appointed to conduct the stat audit for 24 for the company. Mr. Kamal was the engagement partner for the said assignment. In the organizational structure, Kamal noticed that TCWG in the company are also involved in managing the entity. During the ongoing engagement of the audit at the end of the third quarter, 2 limited reviews were issued by NLP and Company. Before the issuance of the third quarter limited review report, the management company imposed a limitation on scope of the audit that Kamal considered likely to be result in the need to express a qualified or to disclaim an opinion on the financial statements, and accordingly he requested the management to remove such limitation. However, the management refused to remove the above limitation. After following the due procedure applicable in these circumstances, finally Kamal with his engagement team concluded that the possible effect on the financial statements of the undetected misstatements could be material and pervasive, so that a qualified opinion would be inadequate to communicate the gravity of the situation. Accordingly, he proposed to withdraw from the engagement after consulting with the senior partners of the firm as on 15th of November 2023. In its resignation letter, the firm mentioned professional preoccupation as the reason for the resignation. Based on the above facts, answer the following multiple choice question. What was the responsibility of NLP and Company with respect to the review of the issue of the limited review report at the time of the resignation? Okay, right. So now the auditor, he has already done the review for the review reports were issued by NLP and Company, right? So June, September, December and March, right? So what does it say? Already 2 limited review reports were issued, and the third limited review report a limitation on scope. Okay, right. And now, so first June, September 2 quarter report issued, and now after that on 15th of November, right? So accordingly he proposed to withdraw from the engagement. So that is resignation of the auditor on the 15th of November 2023, right? So what was the quarter which got over before that? 30th of September 2023, and now the auditor has resigned on 15th of November 2023. So within 45 days from the end of the quarter, so it's entire month of October and the November. So if the auditor resigns, now what does it say? Before he resigns, he has to issue the limited review report for the third quarter. And now, so he's already issued for June and September. Right now, what does it say? He has to issue for December also. But now, if he issues for December, then he happens to issue the review report for the first 3 quarters. Then before resignation, he has to issue the audit report for the whole year also. Okay, what was the responsibility of NLP and Company with respect to the LR at the time of resignation? LR for the third quarter was required to be issued 100% yes. LR for the third quarter was required to be issued, and consequently after its issue, the audit report for the full year is also required to be issued. No further limited review report required to be issued, as it was already issued for the second quarter at the time of resignation. No. Limited required to be issued subject to the terms of the audit engagement. No. Limited review report for the third quarter, and because you issue it for the third quarter, you're fulfilling the criteria of doing the audit of the limited review for the first 3 quarters. That is why before resignation, you have to issue the report for the whole year also. Right? So review for the last quarter as well as the audit report for the whole year is also required to be issued. Okay. Right? So within 45 days, after 45 days, here it looks it is October 31 days, and then after that 15 days over here. So it is beyond 45 days. But anyways, whether it is beyond or within, it says because it fulfills the criteria of the first 3 quarters. Because June, September issued, that is why you have to issue December. And once you issue December, that means you've issued the audit of the limited review report for the first 3 quarters. Then you have to issue the audit report for the entire financial year also. Okay. Right. What was the responsibility of Kamal when the management refused to remove the said limitation? To communicate the matter to TCWG and determine whether it is possible to perform alternative procedures to obtain the evidence, to determine whether it is possible to perform alternative audit procedure, to determine whether it is possible to perform additional audit procedure, so alternative audit procedure or additional procedure, to request for it presentation from the management of or the matter on which limitation is imposed, and also communicate the matter with TCWG. So written representation, no. Additional procedure, no. It is by hook or by crook, right? So if the management has imposed a limitation on scope, what you will do, you will try to perform the alternative audit procedures, right? So what does it say? On scope of the audit that Mr. Kamal considered likely to result in a qualified or a disclaimer of opinion. He requested the management to remove such limitation. Management refused. After following the due procedure, that could be material and pervasive. That qualified would be inadequate. That means it could lead to a disclaimer of the opinion, right? So what does it say? Could it be C or D? No. What does it say? To determine first whether it is possible to perform the alternative audit procedures to obtain the sufficient appropriate audit evidence. And if not, then later on you communicate to TCWG. But the moment management refuses to remove the limitation, then by hook or by crook. So you would prefer to perform the alternative procedure. The auditor proposed to resign on 14th of November. So now it is within 45 days before issuing the limited review report for the second case. What will be the responsibility of MNL and company with respect to the withdrawal from the engagement and the issue of the limited review report at the time of the resignation? The auditor shall communicate with TCWG the matters regarding misstatements identified during the audit that would give rise to the modification and the limited review report and the third quarter were to be issued. Auditor shall communicate to TCWG regarding the misstatements identified that would give rise to the modification and the limited review report was not required to be issued. Auditor shall communicate to TCWG the possible effect on the financial statements of the undetected misstatement, which could be material and pervasive, so that a qualification would be inadequate to communicate the gravity of the situation, and the limited review report for the second quarter to be issued. The auditor shall communicate to TCWG the misstatements identified during the audit that would give rise to the modification of the opinion, and the limited review report for the second quarter was required to be issued. Right. So now if the auditor resigns within 45 days from the end of the quarter, then before such resignation, he has to issue the limited review report for such quarter. Right. But if it is after 45 days, then such quarter as well as the next quarter. So that was our situation 1. And once it is next quarter, then also the report for the whole year. Now, if it is within 45 days, then what does it say? He has to issue the limited review report for the second quarter. It is required to be issued. So limited review report not to be issued? No. Second and third quarter to be issued? No. Then the gravity of the situation and the limited review report for quarter to be issued could be material, undetected misstatement, not all that. What does it say? The matters regarding the misstatements identified during the audit that would give rise to a modification and the limited review report for the second quarter was required to be issued. Okay, whether in the given circumstances withdrawal from the engagement was mandatory, and if so, what is the responsibility of the auditor with respect to such withdrawal? In the given circumstances, withdrawal from the engagement was mandatory, and in case of withdrawal, as the withdrawal from the audit before the issue of the audit report was not practicable or possible, he would be required to give a disclaimer of opinion on financial statements. In the given circumstance, withdrawal from the engagement was mandatory, and in case of withdrawal, the auditor was required to withdraw from the audit where practicable and possible under applicable law regulation. Practical and possible, it's not a technical wording. In the given circumstance, withdrawal from the engagement was not mandatory, and in case of withdrawal, the auditor was required to withdraw from the audit where practical and possible under applicable law regulation. In the given circumstance, withdrawal from the engagement was not mandatory, and in case of withdrawal, as the withdrawal from the audit before issuing the audit report was not practical or possible, he was required to give a disclaimer of opinion on the financial statements. No, what does it say? Withdrawal from the engagement was mandatory, and in case of withdrawal, as the withdrawal from the engagement before issuing the audit report was not practical or possible, he was required to give a disclaimer of opinion. So was the withdrawal from the engagement mandatory? Yes. Last point, what does it say? It was not mandatory. Right, so it was mandatory, right? So in that case, either you withdraw or you give the disclaimer of opinion on the financial statements. Okay. Assuming Opus Limited is an unlisted company, whether the reason for resignation by NLP and company was proper? Yes, in the given case, the reason for resignation as professional preoccupation. You know, what did they give the reason? Preoccupation as the reason for the resignation. Professional preoccupation. Is that a valid reason? Right. So yes, in the given case, the reason for resignation was due to the limitation imposed by the management and refusal to provide the reasons for the same, and accordingly, though being an unlisted company, it was totally upon the discretion of the auditor to provide the clear reasons or not for resignation. Yes, as the requirement for clear mention of reasons is not applicable to unlisted company, no, the auditor should have clearly mentioned the reasons for the resignation in the resignation letter issued to the company. No, the reason should have been a little extensive, and further the exact reason must be provided to the new auditor to be appointed by the company. Irrelevant. Right? Then it is only not applicable to unlisted company. It is totally upon the discretion of the auditor. No, the auditor should have clearly mentioned the reasons for the resignation in the resignation letter issued to the company. Okay, so it says limited review report for the third quarter as well as audit report for the full year. If the auditor proposes to resign after 45 days from the end of the quarter, he has to issue the audit limited review for such quarter, and if he done the LR for the first 3 quarters before resigning, he has to issue the audit report for the full year also. Right, then to determine whether it is possible to perform the alternative procedure. If management imposes a limitation on scope, the auditor shall communicate with TCWG unless TCWG are also involved in managing the entity. And in this particular case study, what it was clearly mentioned in the question that the TCWG are also involved in managing the entity. Right, that the TCWG are also involved in managing the entity. So that is why no need to communicate to the TCWG. Then determine whether it is possible to perform the alternative procedures. Then auditor shall communicate with TCWG the matters regarding the misstatements identified that would give rise to the modification, and the limited review report for the second quarter was to be issued. So now it's a case of within 45 days from the end of the quarter. So the report has to be issued. Right, then in the given case, withdrawal from the engagement was mandatory, and in case of withdrawal, disclaimer of opinion. Right? So if the auditor concludes that the possible effect on the financial statements of the undetected misstatements could be material and pervasive, then in that case the auditor will give a disclaimer of opinion. Yes, and no, the auditor should have clearly mentioned the reasons for the resignation in the resignation letter issued to the company. ICAI has made a pronounced announcement that the auditor of an unlisted company shall not mention professional preoccupation as the reason for resignation. Auditor will clearly mention the reasons for the resignation in the resignation letter issued to the company. Okay, right. So now coming to case scenario 9. JMP Limited is a public company listed on the BSE, having its registered office in Mumbai. The company is primarily engaged in the manufacturing of consumer electronic. During the preceding year, the company recorded a remarkable turnover of 4,200 crore, accompanied by a net profit of 670 crore. Additionally, the company had secured a loan facility from the ICICI Bank amounting to 850 crore. RST and Company, a firm of CA based in Mumbai, has been appointed as a joint auditor along with LM & Company, ABC & Company, an esteemed chartered accountant firm in the same city. JMP Limited has completed the appointment related formalities, as well as they have also signed the engagement letter. The engagement letter contains the details on the objective and scope of audit, responsibilities, management, and the identification of AFRF. Expected form and content I don't see from the principal contents over there. Moreover, while planning the audit, joint auditors have divided the responsibility for audit as per 299. Further, the audit team has established 42 crore as the materiality threshold, calculated as 1% of the turnover. During the audit, LM & Company came to know that one of the employees of the company had been involved in a fraud amounting to 175 lakh. Additionally, as a part of the audit procedure, the auditor had sent requests to 90 suppliers for confirming the year-end balance. The said requests were designed in such a way that the supplier will respond directly to the auditor, indicating that the supplier agrees or disagrees with the same. So positive confirmation request. However, the confirmation responses were received only from 30 suppliers. Moreover, as a part of the audit procedures, the auditors of JMP Limited decided to roll out external confirmation from the the 40 debtors to confirm their year-end balance. However, the management refused the auditor to send the confirmation. After asking the reason for such refusal, auditor concluded that the reasons were unreasonable. Auditor was also unable to obtain the relevant reliable evidence from the alternative audit procedures. Okay. In addition, while forming an opinion, RST and company had a difference of opinion in the valuation of inventory, but LM and company, ABC and company had the same opinion, and accordingly given their majority stance, both LM and ABC assert that RST and company must endorse a common audit report aligned with their opinion. No, separate audit opinion, not bound by the views. Apart from this, AB Private Limited, an associate concern of GMP Limited, appointed HJK and Company is another form of CA located in Rajasthan as a statutory auditor for the first time for the current financial year. The financial statements of AB Private Limited were audited by the predecessor auditor in the previous financial year. During the audit of the current year, HJK and Company came across a material misstatement in the opening balance that affects the current year financial statements. In this regard, the auditor discussed the facts with the management. However, management fails to address or disclose this adequately in the current year financial statement. So last year there was a modification, matter not resolved. The other important information regarding AB Private Limited is as follows. Paid up capital, credit balance of P&L, turnover, borrowing from bank financial institution. Based on the above facts, answer the following. Yes, whether RST and company should adhere to the opinion formulated by LM and ABC and company or explore alternative option. RST will have to go with the opinion formed by majority. No, we will not go. RST and company have the discretion to issue a distinct audit report separately. In such a scenario, the reference to the other audit report issued by the majority of the auditor should be done in the other matter paragraph. RST and company has the option to incorporate a distinct audit opinion paragraph within the common audit report. Kuch bhi, accentuating its importance through the emphasis of the matter paragraph. Kuch bhi. RST can align with the opinion formed by majority of the auditors. However, any dissenting viewpoint held by RST and company should be prominently highlighted within the emphasis of matter. Kuch bhi. And also RST and company has the discretion to issue a distinct audit report. Okay. Right. In the given case, what should be the exact course of the action, right? So now in the given case, what should be the next course of action on the part of auditors of JMP Limited when the auditor conclude that the reasons for management's refusal to allow the auditor to send the debtor confirmation to the debtor is unreasonable and the auditor is unable to obtain the relevant reliable evidence from the alternative audit procedures also. Communicate with the implications for audit and audit opinion as per 705, include the reasons for refusal by the management and the fact of the inability to obtain the evidence from the alternative procedure in key audit matter. Which be, auditor should have included the reason for refusal by the management in the representation. Kuch bhi. Auditor should have included the reason for refusal by the management and fact of inability to obtain the evidence in the emphasis of matter. Again, kuch bhi. So this is not kuch bhi. A. Auditor shall communicate with TCWG and also determine the implications for the audit and audit opinion in accordance with 705. Management's refusal to allow the auditor to send a confirmation request. Super favorite question from SA 505. Go and see that and then come back over here. Auditor of RJ Private Limited shall mention the fact that the financial information for the prior period were audited by predecessor auditor, another auditor. Emphasis of matter, other matter, key audit matter, going concern, kuch bhi, other matter paragraph, right? Other matter paragraph. Okay. In the above given case, what should be the course of action on the part of JK and company when they found material misstatement that has not been accurately accounted or presented or disclosed in the financial statements of the current period? JK and company should express qualified or adverse as per 705, should not pay attention to the material misstatement in opening balance since they were not the auditors. We don't pay attention to this point. JK and company should take the matter in representation. Kuch bhi utha ke representation. Should disclose the fact and emphasis of matter? No. JK and company should express a qualified or adverse opinion as appropriate as per 705. In the context of the aforementioned scenario, does CARO apply to RJ Private Limited company, an associate company of JMP Limited. Right, so Caro applies to the company as the turnover of the company exceeds prescribed limit, as the borrowing of the company exceeds prescribed limit, or does not apply as paid up share capital does not exceed 4 crore and turnover does not exceed 40 crore. Looks like the definition of the small company, and applies as RJ Private Limited is an associate of JMP. No, for subsidiary it applies, so not for the associate. So let me see what is the paid up share capital. It says 1.8, and what is the turnover? 20 crore, right? So 1.8 and 28 crore, right? So what does it say? In the current financial year. Do you have to check it for the previous year or current year? Current year. And now in both these cases, it is fulfilling the criteria of the small company. And once you are a small company, is Caro applicable? No, Caro does not apply to the company as paid up capital does not exceed 4 crore and the turnover does not exceed the 40 crore. Okay, right. So yes, let's look at the option. RST and company has the discretion to issue a distinct audit report and the other matter paragraph as per 299. Auditor shall communicate with TCWG, modify opinion as per 705. If the auditor concludes that management's reasons are unreasonable, unable to obtain evidence from alternative procedure, one, communicate with TCWG, and then 705. Right, then again it says other matter paragraph, where you come to know that prior period has been audited by the predecessor auditor. Any matter which is relevant to the user's understanding. Okay, yes, express a qualified or an adverse opinion. So as per 510, opening balance if there is a misstatement, right? So qualified or adverse. Then Caro does not apply to the company. Paid up capital does not exceed 4 crore, does not exceed the 40, turnover does not exceed the 40 crore. So one person company, small company, and small company means a company other than a public company, and these are the conditions. Okay, right? So that is case scenario number 9. Now coming to 10. Shield and Company, a reputed CA firm, is appointed as the statutory auditor of Prism Limited. The company is into manufacturing of steel products. The company has advanced in all its endeavors by supplying million steel units. The company has incorporated another company, Steelex Private Limited, by investing 45% in the share capital of the company, and at the same time having 100% control over the board of directors as to the agreement with the majority shareholder. The company is listed on US Stock Exchange, but in the process of listing in Indian Stock Exchange, having a net worth of 280 crore. Right, Viraj the product as its product brand ambassador. You are the audit manager and your first year audit trainee asks you the following questions listed below. He has also noted down some of the questions for you to answer to discuss the impact on the planning stage after understanding the entity and its environment. Prism Limited is required to appoint the internal auditor under the Companies Act, and the company complied with the same by delegating the duty to an employee who joined the company as first year architect. Oh my God. Who can be appointed as an internal auditor? CA, CMA. Whether in practice or not, or any other professional as may be decided by the board. Here he is a first year architect, so he's not a professional. The audit team is planning to use the work performed by the internal auditor, as the reports given by him are designed in a marvelous fashion. Even the board of directors are astonished by the design of the internal audit report. Architect and to design would be good. The company is planning to use the working papers of the previous auditor by demanding the audit working papers from him, citing the confidentiality clause. The auditor also plans to aim for testing the opening balances of during the year. Right, so working papers of previous auditor. Previous auditor was appointed as the auditor was appointed as the auditor of subsidiaries. Company plans to use this work for verifying the investment balance during the year. Based on the above, answer the following questions. Okay, right? Company has requested the previous auditor to give back its audit documentation and warned the previous auditor with legal notice to submit them back to the company, showing the confidentiality clause. Okay, right? The previous auditor is bound to return the working papers as the company has raised the confidentiality clause over the firm. 230 is not applicable in such a scenario, as the original owner itself requests you to return the working paper. Oh my God. The auditor has a right over the working papers, but the owner of them is the company. Ma'am, we've studied inter-audit. Okay, auditor has right over its working paper and he is the owner of the working paper. He may at his discretion make portions available to the, make available the work papers to the company. Auditor has a right over its working paper and he is the owner of the working paper, but he cannot give the work paper to any person even at the request of the company. No, he may at his discretion make portions or extracts available, provided it does not undermine the validity of work performed or in case of an assurance engagement, the independence of the firm or its personnel. Okay. Engagement partner has requested you to comment upon the usage of the work of internal auditor by the engagement team in accordance with SA 610. As the work done by the internal auditor is marvelously designed and presented, the same can be considered to the extent the statutory auditor can use it. As the work is highly appreciated even by the board of directors, the same should definitely be used. Okay, the work done by the internal auditor needs to be assessed for the sufficient should be used to avoid the double work. The audit team of Shield and Company needs to reduce the unnecessary work as the same has been performed by other auditor. Okay, the work performed by the internal auditor can be used by external auditor. In this case, if the architect is not an employee of the company but is in private practice, no, he may or may not be an employee of the company. The auditor is required to check the competence and professional care of the work performed by the internal auditor. Thus, the auditor Shield and Company needs to reconsider the audit strategy and cannot use the work of the internal auditor. We need to look into the OCA, the objectivity, competence, and the approach of the internal auditor. Your competence is not there. He's only the first year architect. So can we use the work of internal auditor? No. Okay. Trainee asked whether the audit team is required to perform any procedures for the investment in Steelex Private Limited. Right? It says the company needs to prepare CFS and then same needs to be audited by the auditor, and the auditor needs to consider the financial information and also assess regarding the need to use the work of the component auditor. Auditor needs to perform procedures on the investment balances and the transactions with related party. Auditor need not perform any procedure as the investments in Steelex Private Limited were already made in the previous year. No, we still need to perform the procedure. So both A and B, company needs to prepare the consolidated, same needs to be audited by the auditor. So both A and B. Okay. Trainee asked about role of auditor in the case the investment in Steelex Private Limited is increased to 60% in next year. The auditor should audit the group consolidated financial statements as the consolidation becomes applicable for the company, being the investment raised from 45 to 60. Auditor needs to audit the subsidiary books of account to get comfort over the balances in the material subsidiary. Thus, the audit strategy will change for verifying the investment. It says now you only have to audit, you cannot use work of another auditor. The auditor can either on its own audit the subsidiary or use the work of another auditor to get comfort over the balances in the subsidiary from the next year. The auditor need not do any additional procedures compared to this year, except for the audit procedures over the increase in investment value and its disclosure in the financial statements. Why? Because the first line in the case study said that by investing 45% in the share capital and at the same time having % control over the board of directors. So it is already their subsidiary. Right, so now only you are having an increase in your equity stake. So it says no additional procedures except for that you need to check the increase in the investment value and its disclosures in the financial statements. Okay, right, so D will be the answer. Right, so auditor has a right over his working paper. He may at his discretion, clause 112, right, ethics, right, so he may at his discretion. Auditor is required to assess the competence and the professional care of the internal auditor. So objectivity, professional care and the technical competence. In this case, the architect being an individual with no prior experience and not technically competent, the external auditor cannot use his work as per the standard. Right, then auditor needs to perform both the tasks, one while consolidating and then also checking the investment, right? So one while consolidating and then after that also checking, performing the procedures on the investment and the transactions with the related parties. And as the company needs to prepare consolidated financial statements in the current year, the same procedure needs to be performed in the next year. There will be no additional procedures except for the verification of change in the investment value and disclosures of the same in the next year. Okay, right? So now coming to the case scenario 11. JDDS Deposit Limited and NBFC registered under with RBI. Actually one thought is coming to my mind. I just happened to take a marathon batch. Like I'm giving you a general observation of mine. Like if I am discussing a particular concept, अगर कोई मैं particular concept discuss कर रही हूँ कोई marathon batch में, है ना, और वो marathon batch like exam के 1 महीने पहले है ना, अगर वो like अगर मई में exam है और अगर अप्रैल में कोई marathon बैच वगैरह हो रही है, तो मैं ऐसे स्टूडेंट्स को पूछती हूँ कि मैं एक्सप्लेन करती हूँ और उनको पूछती हूँ कि क्या आपको ये कंसेप्ट समझा, क्या आपको ये ध्यान में आ गया, कैसे किया है, तो दे विल से यस। वो सेम कंसेप्ट अगर मैं उनको फरवरी में एक्सप्लेन करूंगी तो वो बोलेंगे नो नो मैम प्लीज एक्सप्लेन अगेन, नो नो मैम, बिकॉज क्यों अटेंशन का फर्क पड़ता है, ज्यादा अटेंशन, लाइक व्हाट एटीट्यूड यू हैव टुवर्ड्स स्टडीइंग इन द मंथ ऑफ February and what attitude you have towards study in the month of April is quite different. So I always say, taking a marathon batch in April is more easy and effective for me than taking a batch in February, because the motivation levels are already reset. In the month of February, you also have to work on their motivation levels, because that time they think, हाँ अभी तो बहुत टाइम है, ये क्या इतना मैडम बोल रही है कि ये MCQ करो, ये राइटिंग प्रैक्टिस करो, अभी तो बहुत टाइम है, अभी तो फरवरी पड़ा है, मार्च है, अप्रैल है। और वो मैं बात उनको अगर अप्रैल एक सेंटेंस में समझ जाता है कि क्या करना होता है ना। तो अगर ये वीडियो आप फरवरी में देखते तो बोलते अरे ये मैडम कितना फटाफट ले रही है, अभी तो मेरे को धीरे धीरे प्यार से किसी ने समझाना चाहिए, हर एक MCQ का जस्टिफिकेशन वगैरह वगैरह, ऐसा आपका क्रिटिक है ना, क्रिटिक होते आपका रिव्यू होता। अभी अप्रैल में यू से ओ दिस इज अमेजिंग, दिस हैज बीन अ लाइफ सेवर फॉर मी, आई वाज ऑलवेज वांटिंग टू डू दीज MCQ एंड दिस पर्टिकुलर वीडियो हेल्प मी डू द सेम, थैंक यू सो मच मैम। Am I right? है ना, एकदम ऐसे चेंज होता है ना स्ट्रैटेजी, अप्रोच। यू अंडरस्टैंड ना। अगर फरवरी के मंथ में घर में किसी ने थोड़ा भी आवाज किया, अरे आवाज मत करो मैं पढ़ाई कर रहा हूँ, अरे ऐसा मत करो, अरे ऐसा, इतना सारा यू अलाउ द डिस्ट्रैक्शन टू एंटरटेन यू। अभी अप्रैल में इतनी आग लगी हुई रहती है कि कोई बात पीटे तो फर्क नहीं पड़ता है, क्योंकि पता है कि अभी अगर नहीं किया तो फिर भाई जो जून जुलाई में जो रिजल्ट आएगा, फिर जो म्यूजिक फेस करना पड़ेगा, वो लगता है ना बाबा ना, है ना, कि नहीं, वो फिर से वो सारी समस्या, दुविधा, उलझन वो नहीं चाहिए लाइफ में, है ना। ऐसा होता है ना। तो अभी क्या कर रहे हो, अच्छे से पढ़ रहे हो ना, एकदम एकदम ऐसे ताकत लगा के दिल, मतलब पूरा दिल से पढ़ो। जैसे अभी मैं यहाँ MCQ तुम्हारे साथ डिस्कस कर रही हूँ, फिर भी मेरे पास टाइम नहीं है कि मैं ऊपर कैमरा के पास देखूं। मुझे पता है कि मेरे सामने कैमरा है, मैंने देखना चाहिए, तो मेरे पास टाइम ही नहीं है। और पता है, ये मैं हमेशा मेरे स्टूडेंट्स को बोलती हूँ कि अभी जितना नीचे उतना रिजल्ट के दिन ऊपर देख पाओगे, और अभी जितना ऊपर देखोगे उतना रिजल्ट के दिन मुंडी नीचे डाल के बैठना पड़ेगा, है क्या नहीं? सच्ची बोल, सच्ची, एकदम सच्ची मुच्ची, एकदम सचमुच, एकदम डेडिकेटेडली, रिलीजियसली, like whatever is required for the success in exam, make that happen, do that, and you can do it. It's just the perfect time. Okay, right, chalo, let's come to question number case scenario 11. JDDS Deposit Limited and NBFC registered with RBI under section 45IA of the RBI Act and listed on NSE appointed BDP and company CA their statutory auditor for the financial year 24. You say, ma'am, कितना अच्छा है आप पढ़ रहे हो, हमको पढ़ना नहीं पड़ रहा है। हाँ ठीक है, okay. Rajan, the audit partner of BDP and company, extracted the monthly net own fund position from the books of account of JDDS Deposit Limited. Month April, May, June, July, August up to March, net own fund is calculated based on monthly position. During the year, Rajan recommended to the board and the audit committee the appointment of the internal auditor. However, the board rejected this recommendation due to budget constraints. They assured that they would consider establishing an internal audit department within the company next year. Based on the above facts, answer the following. Kindly guide Mr. Rajan regarding the areas where he may need to report to the absence of internal audit function in the company in the audit report. Right? So, CARO, okay, so they are talking about the CARO. So, CARO, where do you report on internal audit? Clause 14. And is the company required to appoint an internal auditor? It says deposit limited. What is this? It says the net owned funds of the company as calculated based on the monthly position. Right? So what does it say? Is the company is registered and listed on the National Stock Exchange. So matter is over. Right? Listed. So listed company, they always need to appoint an internal auditor. So auditor is required to report under clause 1399, that is related parties. Okay. The auditor is required to report the matter in the basis of qualification of his audit report as the auditor was unable to place a reliance on internal audit function of the company. Kuch bhi. Auditor is required to report the same under clause 14 of the CARO. Auditor is required to report the matter in key audit matter which requires significant professional judgment and user attention. Kuch bhi. Like the auditor is required to report the same under clause 14 of the CARO 2020. Rajan reported under clause 3A3 of the Master Directions Non-NBFC Audit Report Reserve Bank Directions 2016 that DJDDS Deposit Limited is not eligible to hold its certificate of registration under section 45IA of the RBI Act as during the year the net owned funds of the company fell below the minimum required limit. Management of the NBFC had a different opinion that a certificate pertaining to the net owned funds from the statutory auditor is required with reference to the position of the company as at the end of the financial year and not based on each month's position. Kindly guide Mr. Rajan with respect to the requirement under the master direction, right? So whether it is required on the last day of the financial year or for the entire financial year, every NBFC shall submit a certificate from its statutory auditor that it is eligible to hold a certificate of registration. Such a certificate should be with reference to the position of the company throughout the financial year. Every NBFC shall submit a certificate from the statutory auditor that it is eligible to hold a certificate of registration. Such a certificate should be with reference to the position of the company as at the end of the financial year. Only NBFC microfinance institutions will submit a certificate from the statutory auditor. Such a certification would be with reference to the position of the company throughout the year. And every NBFC shall submit a certificate from the statutory auditor that it is eligible to hold the certificate of registration under section 45IA. Such a certificate should be with reference to the position of the company at the end of each month. So not at the end of each month, not for microfinance institution, not for throughout the financial year. It is at the end of the financial year. Right? So you read at the ABCDE NBFC audit report direction that a certificate from the statutory auditor is required regarding the position at the end of the financial year. Okay. And Rajan wants to highlight the matter with respect to the absence of the internal audit function in this audit report under emphasis of matter paragraph. However, management was of the view that the audit partner was not right by disclosing the said matter in his audit report as it was an internal matter and the audit team has not identified any material evidence which could impact the opinion of the auditor. Kindly guide Rajan whether proposed reporting under emphasis of matter paragraph is correct. Emphasis of matter paragraph included in the audit report refers to a matter which is already presented in the financial statements. It is of such importance that it is fundamental to the user's understanding. Emphasis of matter paragraph, it says it is those matters which is fundamental to the user's understanding. Financial statements, hence reporting under emphasis of matter is incorrect, it is correct. Then emphasis of matter paragraph included in the audit report refers to a matter other than those presented disclosed in financial statements. No, it is related to financial statements. Other than those presented related in financial statements. No, it is related to the financial statements. And here, what is the matter regarding internal audit function? Is it related to the financial statements? No, it is not related to the financial statements. That is why putting it under emphasis of matter paragraph is incorrect. Right? That is why putting it under the emphasis of matter paragraph is incorrect. Right? So clause 14, whether the company has an internal audit system, whether the reports of the internal auditor were considered by statutory auditor. Every NBFC will submit a certificate from the statutory auditor at the end of the financial year. At the end of the financial year. An emphasis of matter paragraph, any matter which is presented or disclosed in the financial statements and it is fundamental to the user's understanding. Okay, right, coming to case scenario 12. MSK and Partners, a firm of chartered accountants having Manik and Taran as partners, is based at Bangalore. MSK and partners are appointed to conduct statutory audit of Xylo Limited. Xylo Limited is required to appoint an internal auditor as per the statutory provisions given in Companies Act and appoint CAIA as its internal auditor. MSK and partners asked IA to provide direct assistance to him regarding evaluating significant accounting estimates by the management and assessing the RMM. For these matters, we cannot take the direct assistance because these are matters which involve the significant auditor judgment. He also seeks his direct assistance in assembling the information necessary to resolve exceptions in the confirmation responses with respect to the external confirmation request and evaluating the results of the confirmation process. For this matter, you can take the direct assistance. Again, there is a case study for this one in SA 610. Manik accepted his appointment as a tax auditor of the firm under Section 44AB of the Income Tax Act and commenced the tax audit within 2 days of the appointment, since the client was in a hurry to file the return of income before the due date. After commencing the audit, Manik realized his mistake of accepting the tax audit without sending any communication to the previous tax auditor. In order to rectify his mistake before signing the tax audit report, he sent a registered post to the previous auditor and obtained the postal acknowledgement. Guilty of professional misconduct under 811, as he has to send it before accepting the audit, not before signing the report. Okay, Taran provides consultancy services. Taran was awarded the best speaker of the year as gratitude from the institute. Later on, CA Taran posted a framed photograph on his website wherein he was receiving the said award from the institute. Solicits. 611. Upon hearing from the efficient services provided by MSK and partners chartered accountants, they were approached by XYZ Cooperative to act as their auditor for the upcoming years. The firm agreed to the offer and had the following options in mind with respect to the fees to be charged. Fees to be charged as percentage of net profits, cooperative society. And a 1011, auditor of a cooperative society, percentage basis allowed. Charge fees on 501 rupees allowed. So any one of the two. Okay, based on the above facts, answer the following. Under which clause CA Taran is liable for misconduct? So CA Taran, what he did, he is given the best speaker of the year and then he posted framed photograph on his website. So website is given under 611. Right, so is it second schedule? No. First schedule, clause 6, part 1 of the first schedule. MSK and partners sought direct assistance from CAIA internal auditor as stated. Advise whether he is permitted to do so. Right, so can take direct assistance regarding the accounting estimates? No. Cannot assist MSK and partners in assembling the information? Yes, they can take direct assistance for evaluating accounting estimates? No. Right, what does it say? Cannot take assistance for resolving exception. No, for that you can take the direct assistance. MSK and partners cannot ask direct assistance regarding evaluating accounting estimates and in assembling. It says for nothing you can take the direct assistance. And MSK and partners cannot ask direct assistance regarding accounting estimates and assessing the RMM. However, they may assist MSK and partners in assembling information necessary to resolve exception in confirmation responses as for 610. Right, so I request you go to the case study of case 610 and you'll see a question on the similar lines over there. With respect to the fees to be charged for its new assignment, which option can be opted by MSK and partners? Charge fee 501, percentage of net profits, either one or two. Any one of the two allowed. Before signing the tax audit report, Manik has sent a registered post to the previous auditor and obtained the acknowledgement. Will Manik be guilty of professional misconduct? It says 811. Manik will be guilty. 811, Manik will not be guilty. Out. 811, Manik will not be held guilty since the requirement for the previous auditor is only for statutory audit. Kuch bhi. And as per 812, no. Right, so what does it say? 811. Right, Manik will be guilty of misconduct since he has accepted the tax audit without first communicating with the previous auditor in writing. Right, so what does it say? 611. Right, own website, but website should be designed in such a manner that it does not solicit client or professional work or does not amount to advertisement. Only display of the passport size photograph is allowed. Right, then cannot ask direct assistance for the You shall not use the work of internal auditor for significant judgment and for the higher assessed RMM. However, for assembling information, you can take the direct assistance. Right, then what does it say? No chartered accountant shall charge or offers to charge, accepts or offers to accept, except in case of auditor of a cooperative society. Fee may be based on percentage of paid up capital, working capital, gross income or net income or the profits. Right, then 811, what does it say? Cannot accept the position as an auditor previously held by another CA without first communicating with him in writing. Okay, right, so that is case scenario 12. Now coming to 13. Govil is a practicing chartered accountant and also a member of the CPA Ireland. He handles only GST related work and tax audit for the clients. Currently, he has 19 companies for which he is handling the tax audit. At the beginning of the current financial years, he has approached 40 new clients for the tax audit assignment. So 19 doing already, 40 more, 59. So within 60. Okay, he was reluctant to accept all the work as he was feared breaching the permissible limit of handling the clients. After consulting several friends of his, he finally decided to accept the work of just 2 big clients who approached him. Chandan, Govil's friend, a chartered accountant in practice and a member empaneled as IP, was acting as the statutory auditor for a listed entity. The audit for the current year was completed, but there was a difference of opinion between the auditor and the management. As a result of this, company did not send the notice for AGM to Chandan. When inquired, it was said that the company is not obliged to send notices to the auditor and it's the responsibility of the auditor to be aware of the AGM. Having heard this, Chandan went to his friend to clarify the above matter. As a result of this incident, the management has not paid part of the agreed audit fees to Chandan. In retaliation, Chandan took lien over the few documents pertaining to the company. Having come to know about this, Govil immediately informed his friend that this act would lead to professional misconduct. Right? So can you exercise audit lien even for non-payment of fees? No, it's a recent decision of the Ethical Standard Board. Govil and his friend Chandan decided to start a partnership firm. They completed all formalities and went ahead and printed their visiting card as follows. DS and Associates, Govil Chartered Accountant, CPA Ireland, Partner, MMM Street, Delhi. DS and Associates, Chandan Chartered Accountant, Insolvency Professional, MMM Street, Delhi. Okay. The firm also received the following assignment. Concurrent audit for TT Bank, statutory audit for HBT Bank. It is to be noted that the bank was not sponsored by TT Bank. Offered to act as the settler of JJ Charitable Trust, included in the list of the recent decisions of Ethical Standard Board. Internal audit of a PF trust of a government company, yes, and statutory audit of the government company. No, if you're doing the internal audit of the PF trust or statutory audit of government company, any one of the two. Again, for these you can refer to the recent decisions of the Ethical Standard Board. In the given case scenario, has Govil breached the maximum limit of the clients? If yes, can he be held guilty of misconduct? Yes, the ceiling on the number of tax audits which can be accepted by him is 20. Ouch. Yes, the ceiling on the number of tax audits which can be accepted by him is 20. Ouch. No, in the above case, the maximum ceiling limit is 25 as per the latest decisions by the ICAI Council. No, in the above case, the maximum ceiling is 60 in number. The assignment existing plus new handled by Govil is well below the prescribed limit and hence there is no breach. Correct. Will the retaliating act of Chandan against the company make him guilty of misconduct? Right. So what act did he do against the company? Right. So he said that the notice of the AGM has not been sent to him. So agreed part of the fees, and that is why he exercised the lien over the client books and documents and records. So they are fighting. Okay. Right. So no, the above not lead to professional misconduct under section 147. Chandan shall be punishable for exercising lien over client document. No, the Chartered Accountant Act is silent about the above situation and hence it will not lead to professional misconduct. Yes, as per the recent decision of the Ethical Standard Board, a chartered accountant cannot exercise lien over the client records document even for the non-payment of the fees. Right? So can you exercise lien over the client documents even for the non-payment of the fees? No, you cannot. See over here. a chartered accountant cannot exercise lien over the client document even for the non-payment of the fees, right? So as per 712, it says gross negligence. No. In the given scenario, visiting cards printed by Govil and Chandan, is there any misconduct, anything which will lead to professional misconduct? Mentioning CPA Ireland and IP by Govil and Chandan violates the provisions of 711. Both of them will be guilty. There is no information contained in the visiting card which leads to misconduct. All details are as per, right? So one it says it is guilty, other it says it is not guilty. Okay, mentioning CPA Ireland by Govil violates the provisions of 6 and 7. Govil will be guilty. However, Chandan's card is concerned, nothing mentioned is against the provisions of the Chartered Accountants Act, hence he will not be held guilty. So it says Govil guilty, Chandan not guilty. Mentioning the term IP by Chandan violates the provisions of 711. He shall be guilty, and Govil's card, nothing mentioned is again, so he will not be guilty. Right? So both of them, that CPA Ireland. So what does it say? Advertise his professional attendance or uses designation or expression other than that of CA on professional documents such as letterheads, signboards, visiting cards, unless it be a degree of university established by law in India, recognized by central government, IP, title indicating membership of ICAI, or an institution whose membership has been recognized by central government or the council, right? So CPA Ireland recognized by central government or the council. So that is why, what does it say? No information contained in both of the cards which leads to any misconduct. All the details are as per the provisions of the 711. Okay, and the firm had received the following assignments. What does it say? Concurrent audit for the TT Bank, statutory audit for HBT Bank, acting as a settler, internal auditor of a PF trust, statutory audit of the government company limited. Right, so can he accept all of these assignments over here? It says 1, 2, 3. Yes, 1, 2, 3. And out of 4 and 5, either 4 or 5. Right, either 4 or 5, right? So that is the B option. Now in the above case, the maximum limit is 60. So specified number of tax audit assignments, it is 60 tax audit assignments. Okay, right. As per the recent decisions of the Ethical Standard Board, a CA cannot exercise lien over the client document even for the non-payment of the fees. Right, so there is no misconduct for the 711. And then it says, as per the recent decisions, a CA which has been appointed as an internal auditor of a PF trust of a government company cannot be appointed as the statutory auditor. So 1, 2, 3, all but either 4 or 5. Right, either 4 or 5. Right, now coming to case scenario 14. Honey and Money, a chartered accountant that provide assurance services to many companies, including listed company. The firm has offices across many locations in India with subject matter experts in most of these locations. The firm has established a comprehensive quality management system covering leadership responsibilities for quality within the firm, ethical requirement, acceptance, continuance of client relationship, and specific engagement based on SQC 1 issued by ICAI. During the current year, the audit engagement of a listed company was picked up for inspection by an appropriate authority. The inspection covered various aspects of the audit of financial statements and included an assessment of the firm's quality control system. The reviewer decided to discuss the following with the audit team members. Reviewer inquired about the roles and responsibilities of Honey. Honey explained that the engagement team is comprised of Honey, the engagement partner, other professionals, including the engagement in charge. Money was the EQCR. As the engagement partner, he was responsible for the DSP of the audit performance and compliance with the PSLR and the audit report being appropriate, taking responsibility for review being performed in accordance with firm's policy procedure. He also explained that he is partner and has decided to continue as an engagement partner for the next year as well. The firm policy permits that an engagement partner can continue consecutively for 15 years. Kuch bhi. Okay. Reviewer inquired about the roles and responsibilities of CA Money, the EQCR. CA Money explained that EQCR plays an important role in the quality control process of an audit and is key to safeguarding audit quality. The firm has established a comprehensive system that prescribes the eligibility of EQCR, the need to maintain objectivity by EQCR, and considerations for carrying out audit effective EQC reviews. Specifically in this engagement, Money explained that he has a rich experience in handling direct and indirect tax matters and was selected by Honey. Engagement partner selected EQCR. There was no formal letter confirming his selection as EQCR. The listed company had significant GST litigation. Money ensured that he was involved in forming the audit team judgment related to these litigations, including making relevant provision. Then objectivity of EQCR is getting affected. Money confirmed that EQCR review was conducted in periodic interval and the engagement team had resolved all the observations raised during the EQCR. The matter 3. The reviewer inquired about the areas that required discussion with management TCWG or areas that require significant efforts. CA Hanni explained that during the current year, the engagement team observed material prior errors in the recognition of revenue, including errors in recognition of revenue on a gross basis instead on a net basis. These errors were identified after the year end and required significant judgments and efforts by the engagement partner. After many deliberation, the management agreed to correct the material prior to the period errors by restating the comparative information as per applicable gap. Relevant internal controls were accordingly modified after the year end. Considering the complexities involved, the measurement of revenue was identified as a key audit matter. Matter 4. The reviewer inquired about the rationale for material difference between the amount of revenue stated in the financial years and the corresponding amount in the board report included as a part of annual report. Hanni explained that the auditors are required to comment on the true and fair view of the financial statements and are not required to comment on annual report. He also explained that the board report was not provided to the auditor till the date of audit report. Accordingly, after considering the requirements of 720, a specific statement was made in the board report regarding the non-availability of the board report, and that auditor is not responsible to consider the board report, which is expected to receive expected to be received the date of the audit report. Thus, any discrepancy between financial statements does not require any consideration. However, as good governance, Hanni has obtained a reconciliation of the amount of revenue between the board report and financial statements. Based on the above, answer the following. Whether the selection of EQCR is as per the requirements of SQC 1. No EQCR objectivity was not maintained since it was selected by the engagement partner and no formal communication was made regarding such selection. Okay. Yes, CA Money is perfect match for the engagement team as his experience as a tax professional is directly relevant to company tax litigation. Kuch bhi. No, the EQCR objectivity could not be maintained since it was selected by the engagement partner and made decisions for the engagement team regarding how the work is to be done. Right, so he made decisions, Money assured that he was involved in the audit team judgments related to these litigation. Right, and CA Money is a perfect match. Perfect match, perfect mismatch. For the engagement team, as his experience as a tax professional is directly relevant, EQCR review was conducted in a timely manner before issuing of the report. Kuch bhi. Right, so what does it say? No, EQCR objectivity was not maintained since he was elected by engagement partner, correct? And no formal communication was made regarding such selection or made decisions for the engagement team. The problem was he made the decisions for the engagement team. Okay, the reviewer is of the view that the audit opinion on internal control, whether the company has adequate internal financial controls and the operating effectiveness of such control under 143(3)(I) should have been modified as material weakness existed in the comparative information. Do you agree with the reviewer? Yes, restatement of comparative information due to error is a strong indicator of a material weakness in the internal control. So misstatement in previous year detected in the current year. Also relevant internal controls were not corrected by the end of the year. No, all prior period error were corrected as per applicable gap by restating the comparative information. No judgmental matters were divergent views are possible are not indicative of material weakness. No, internal controls were corrected by the date of the audit report. No, yes. Wow. Okay. Right. So yeah, prior period errors is an indicator of a material weakness in an internal control. And whether CA Hanni should consider the board report or not, as the audit report was already issued, the board report should not be considered as the auditors don't have any obligation to consider the other information after such date. No, board report should be considered since auditors' responsibility in relation to other information is uniform irrespective of the point of their availability. So prior to the date of the audit report or prior to its issuance by the entity. The board report should be considered since subsequent events are required to be assessed, so giving it a different dimension from other information, taking it to subsequent events. The board report should not be considered to align with the audit report, which specifically excludes other information obtained after the date of audit report. Nothing like that. The board report should be considered since auditor's responsibility in relation to other information is uniform irrespective of the point of their availability. Right? So option C, no, the EQCR objectivity could not be maintained. Right? So as per SQC 1, the firm's policy procedures are designed to maintain the objectivity of EQCR. So EQCR is not selected by engagement partner, does not participate in the engagement during the period of review, does not make decisions for the engagement team, and is not subject to other consideration that would threaten the reviewer's objectivity. Okay, right. So restatement of comparative information due to error is a strong indicator of a material weakness in the internal control, and the board report should be considered. So what does it say? As per 720, if the auditor concludes that a material misstatement exists in the other information after the date of the report, yes, if the other information is corrected, perform the procedures necessary. Not corrected, then communicate with TCWG and also take appropriate action, including considering the auditor's legal rights and obligation. Okay, right. So in first video, we completed 1 to 7. Now we've completed 8 to 14, and a 177 page document, right? So we've almost done 70 plus. Okay, right. So please, मतलब मैंने ये video record किया है just so that it to more and more and more of the CA final audit students. Okay, and I can't have any other brand ambassador more effective than the student who is listening to my voice right now. So it's my humble request to all of you to please like, share and subscribe to the Aarti Lahoti Audit Learning YouTube channel. Wishing you all the very best for your exams. Thank you so much for your patient listening. All the best.